Hello fellow traders, this is another video of the series. Today we will talk about leverage. Leverage is really important, and when we are talking about forex, you cannot FX without it. There are many places around the world that trading considered to be legal. You are not allowed to trade with any product if you have leverage. So imagine how important is when it comes to leverage in your account. We will discuss if it's good or bad and how it can be your friend or your worst enemy. In this video, you will understand the concept and why sometimes and in some markets, especially in FX, you cannot without it. So, let's say that there are cases when you are really investing, because in Forex we are not investors. We are speculators in a binary system. When you are buying a real stock and when you are buying the underlying asset of a stock, then you are expecting some dividends. You are a part of the company and you are waiting the profits to be distributed as normal to the shareholders. This is not something that you should expect in FX. There is no such a thing. So you need leverage. And why you need leverage? Because leverage, and by definition, will increase your buy power. So let's say that if you are using a 1 to 10 leverage to understand the concept and you have a 100 euro account, you will increase your buy power by 10 times. So now your 10 euro account will be able to make purchases of 1000. Now, I will give an example starting by zero leverage. Now, we will start speculating. We will execute a trade without using any leverage at all. Now, I will open the Fiber. And let's say that at this point, at 116, I am speculating that the prices will go until 117. So I see a potential profit here. So what I am doing, I am giving my euro, I am exchanging my euro in order to get USD. So now my 100 euro bought me 116 USD. So the rule in FX, well, in any market, is that market doesn't move in one way. It moves with waves. So it might go a little up, down, and so on. So the prices might not get there immediately. Well, actually, the prices might not get there at all. So might they go in 115 or in 114 or in 113? So actually my initial value is not the same because I bought 116 USD at that value and now I have less in compared to that. But still there is no such a big deal. I mean, I have 117, 116, 115. I do not care so much if the prices go down. Now, let's assume that eventually the prices goes up and the prices hit my 117. Now at this point, I have a winning trade. So I'm changing back my USD and now I have euros. So when initially I had 100 euros, now I have 100 euros and 83 cents. So I executed a winning trade. Well, it's not much. It's just 83 cents, but considering you took that without doing anything. So it's not so bad. Now, let's use a leveraged example to understand the difference. Now let's multiply our buying power. Let's use the leverage as we described it before. Remember that we managed to earn 83 cents. So why not to leverage? Why not to earn 83 euros instead? Why not to leverage and earn 830 euros? I am almost doubling or multiplying my account by 10. I have almost 10 times my account. Well, wake up from your dream, because this is the part that becomes your worst nightmare. You are forgetting that prices are moving in waves or sideways. So the price might not get there right away. Well, actually, it might not get there at all. So let's use a leverage of 10,000. Now, with 100 euros, I am buying 11,600 USD. It looks like we've got money out of nowhere, like we've got money out of thin air. Well, this is not true. This is like entering a matrix world. Like in the previous example, when the exchange rate fell into 115, we lost nearly 1 USD, which it was really fine. We just expected the price to go there. But now, with the leverage, we have 11,600 and we dropped in 11,500. So, in this matrix world, that the money comes from the sky, we lost 100 USD. And here comes reality. This will be depicted in your true account. So our account is almost gone. A little pips further and the entire account will be lost. We will lose our real money. It's like the matrix actually. When you are dying in this world, you are dying in the real one also. So converting your money into huge amounts, the slightest and the smallest differences can cause you major losses. But let's give the opposite example. Let's say that you are lucky, you feel lucky, and the prices goes right away there. So you manage to multiply your account by 10 times, 100 times, 1000 times, or 10,000 times. So remember the matrix, because congratulations, now you just became gamblers. Market is not your friend. The more you leverage and the more you risk, the more will be the result in your entire account. So remember, if you die in Matrix, you die in real world. Thank you for watching. I hope to see you in future videos.